Dan Veru, second quarter earnings season is underway. It's still early, but from what you've heard so far, what's your reaction and what do you think it means for the second half of the year?
Well, as you said, it's a very small sample so far. I'm very encouraged because we're seeing some underlying strength in the financials. Those have been largely absent from the market rally for the last several years. They certainly underperformed. My sense is that could be changing right now because I do feel that segment of the stock market is somewhat underowned. Remember, the first quarter of the year we still had weather issues we were dealing with. The second quarter obviously won't have that component to it. There's an underlying strength in the economy that I think will be fully evident as we get through as we continue through the second half of the year.
Can you dig deeper into the financials, because this is a big week for big bank earnings? Companies like JPMorgan have done well. Bank of America certainly did well. Talk about the big banks versus the small banks, as well as the investment banks.
Right. And JPMorgan's owned in our private wealth management business. It's owned by me personally, and I also personally own Bank of America. So I'm obviously bullish on the segment because I see interest rates rising, because of the underlying strength in the economy. It's been all but telegraphed that the Fed is going to raise interest rates. I think for now it will likely be a one and done type of interest rate raise, because while the economy is improving, it's improving at a very slow rate. That's going to be good for bank profits as the yield curve gradually steepens and there's more opportunity. Also, as we're seeing from some of the earnings that we're seeing from the banks, the big fines have likely crested, and we're not going to see those anymore. If anything, maybe they'll start going down a little bit. So that's another added benefit to some of the banks.
Well, we didn't see a lot of growth in the first quarter, and the financials were flat, but we did see a lot of M&A. Do you expect this to continue, and how will this affect the investment banks? Because they may not be doing as much bond trading, but they're collecting a lot of investment banking fees.
And those, as you know, are extremely lucrative for the banks. I believe that we are really only midway through this current merger and acquisition super cycle. I think it's got a long way to play out. You're seeing many deals. We're talking about merger Mondays virtually every Monday, where we see a couple of deals get announced. I think that pace is going to quicken. Most recently, we saw a lot of large profile deals in the healthcare space, particularly the managed care companies. But really, it's across the board that we're seeing deals in the industrial space, healthcare, as I've mentioned, and all different areas. I think we'll continue to see that as a trend going forward.
Let's talk about healthcare. What's your view of healthcare? Because this has been the hottest sector since 2008, since the Great Recession started. It's led the S&P every year. Do you expect that to continue?
I think gradually healthcare is likely a hold, not a buy at this point, simply because of valuation and the fact that the sector has done so well. There's nothing wrong with it. It's very difficult to find new ideas that meet our criteria of valuation. The biotech space is very, very difficult to predict because there's a very broad distribution of stocks that have done extremely well and stocks that have done very poorly. But the stocks that do so well, it drags the entire index up. So there's so much about stock selection in that space, and it can be very unpredictable in terms of how you pick stocks. So I'd be cautious with that segment as well.
And speaking of stock selection, can you give me your one or two best names that you're looking for to outperform in the second half?
Well, since we're talking about the merger and acquisition space, Lazard has been a favorite of ours for many years. I believe that they will continue to get their fair share of M&A advisory assignments. They are a boutique in that regard, and an extremely well-regarded pure play within the M&A space. They also have an extremely lucrative money management business as well, which a lot of people don't really think about when they talk about Lazard, but they've got a very big asset management business that's done very well and gives them sort of that underlying steadiness to the overall business model. Another bank that we like very much is a regional bank called Private Bank Corp, based in the Midwest. This is an extremely well-run bank. We're looking towards very nice profit growth at this bank. They have yet to report, but I anticipate that the report will be quite good.
All right. Thanks a lot, Dan.
Thank you very much.
Thank you for watching The Street.